Every major bank down there was expecting 25 basis points rate cut. Just JP Morgan and myself were expecting 50, and that's what we got. But on top of that, we got a dot plan with 25 basis points on top by the end of this year. So 1 percentage point overall. What that's gonna mean for you and for the markets, let's discuss and stay tuned. Good morning, good afternoon everyone. My name is Russ and today is a Friday macro update which is gonna be quite special. Today we're gonna cover altcoins, which we have not done. As I told you, please focus your priority on the asset class that performs the best. And so far there was outside of crypto, but today is the day. Secondly, we're also gonna cover a bit of macro to illustrate why I think we're gonna be cautiously bullish in the next few months, and then we're gonna cover certain things from the stock market. Maybe let's start with the macro first. And there's a reason why I was telling I do not support the discussion between 25 basis points and 50 basis points. I think there should be no cuts at all whatsoever, because if you see on initial jobless claims numbers, there is a strong progression downwards. And this is not an environment you should cut. So for me, Fed is doing something completely outrageous, and due to the fact that I think they're doing outrageous things real, I was expecting 50 basis points. I'd explain on my Wednesday video, there's a number of reasonings why that was happening. But now, coming to the charts, what do we see? And as always, guys, I start with the Forex market. And you know why? Well, because Forex market trades per day 5 times, probably 6 times the volume of the entire crypto market. And we're speaking here about $10 trillion daily. And that's the reason why those moves, despite I don't trade them directly, I'm not interested in trading Forex for a few basis points here and there. Those are the ones that define the direction for me. And if you remember my Wednesday video, I was telling you what are those two asset classes that's going to benefit the most from this dollar move. For those who forgot what the DXY is the basket of 6 different currencies, but euro is the main one, and it constitutes short of 60% of what affects the DXY overall. So if we're gonna look at euro to USD, we're gonna see that we cannot still break through that level, the level that has been here, 1,12. That's the level we've been fighting for a while, and we start bringing a few divergences here. So I would normally suspect a certain move down to grab that liquidity, and that would represent an M pattern, and then from here we would decide either we continue the move or we accept in the previous range. But in both cases, this drop in euro that I'm expecting from here, I think we're a little bit out of steam, is going to be bullish for the dollar. Now, looking at the British pound, it's acting a bit stronger, so maybe the real bounce would continue all the way to 135, which is another 1.5%, I guess, from here, exactly 1.5%. And what's so important to represent the mood and to risk off attitude of the market is, for those who've been watching my videos since a while, you guys would know it's Aussie dollar versus Japanese yen. And here we are starting to print this beautiful W formation, obviously with this 50 basis points rate cut. A lot of risk on appetite is back to the market, and I expect Australian dollar to continue its rise. And maybe last thing we're gonna look today at is the US dollar versus Japanese yen, because Japanese yen is number 2. It's number 2 currency that affects DXY. And here we also have seen a significant, I'm not going to go into the macro details because that was all related to carry trade and the Bank of Japan policies. So we had a severe 14% drop in just a matter of a few weeks, and now we are mean reverting to those. For those who doesn't know, mean reversion, despite being a very, very simple strategy, let's say around your moving average, either it's going to be 50 exponential moving average on the daily or 200, it doesn't matter, but things tend to mean revert. So if you had such a strong deviation below your exponential moving average, it is normal that there will be a liquidity grab, and us coming back to those, which is providing again extra strength for the dollar, and extra strength for the dollar is an extra strength to DXY. So now coming back to the DXY chart, I told you I would expect a little bounce to here to the zone of 101.3, 101.4. That's exactly what happened. We couldn't get accepted there, and so we're continuing our move towards the value I've been indicating back on Wednesday, and this value is 1991, I would say. The question here, I think on the shorter term time frames, we still taking into account what I just showcased to you in those particular currencies, that we can have one more spike, and in this case I would say be careful for Friday. I think there is a lot of bullishness, and this is potentially the time to liquidate the early longs. Let's have a look. Looking at Bitcoin high block liquidation level map here, we see that indeed cumulative volume delta is quite high, so there's too many longs. As you see, the short liquidation to long liquidation is a little bit overextended. It's like 9-1, I would say, and despite the fact that spot has been significantly beating the blue line here that was related to this price move, I think that even just looking on that, you know, three tap to the high, I would suspect that it is quite likely on this DXY move down to come and grab liquidity. How far? That's the question. And looking at the chart right now, I would suggest you the following. Looking at Bitcoin chart on the daily, you would see, as you remember, for those who've been watching my videos, there is a certain thing which is market structure break, MSB, the concept that we all know. For those who doesn't know, I'll quickly remind. We had high here, and we had a low, and then we had a lower high, lower low, lower high, lower low. So we've been in consistent downtrend for days, and of course, depending on how you look at the at this candle, if you take into account the week, or you don't take the week into account, but in any case, there was a new low and potentially a higher low here. And if we are able to bring this higher high, I'll put it in a red circle here, this higher high can be the beginning of that move that I've been predicting towards year end. If you would see any videos of mine since the beginning of this year, I was giving you my $88,000 per one Bitcoin target, and I think that that can be the beginning of this move if we accept here and potentially bring this higher high towards my 67 level. Maybe I'm gonna be a bit front run, 65 to 67, and then retest at around, if you're lucky, 61. And that's why I'm not so much in rush here to long Bitcoin. I would rather wait for either us accepting above 67, if of course you're a long-term holder. That's where I would like to add to my position, either at this level or at the retracement back to that monthly level 61.5 or anywhere in between. I'll show you in a second later how you can also spread your beats using, for example, Bybit and Teal Street Terminal, so that you don't have to allocate everything at once. You can create 20, 60, 120, whatever you want, depending on your position size, number of bits. But what's so important here is not just the Bitcoin chart, it's the fact that first time in a while we are actually starting to reverse in our Bitcoin dominance. And here, looking at the levels that we reach here, I would say 58.6 to 60 was my zone, was my, like, let's say, worst case scenario. Worst case when it comes to alts, best case when it comes to BTC. I was expecting the reversal to happen in the zone 58.5 to 60, and so that's what we actually got. Now printing a bunch of divergences at that high at around as well for RSI and also OBV. That both are very meaningful divergences to me, much more meaningful than anything else. So can we now have a little retest and accept in a lower range? That can be a lot of fun for alts, and of course the chart that's going to represent that move, it's going to be Ethereum to Bitcoin. And as you see as well, a huge mini reversion here. We were trying to catch ETH here unsuccessfully, that's all good. And the second level was that line here that was indicating the order block back in the days, months ago. And I believe that can also be something like that. We can print this like W formation, and that can be much more lucrative with the interest rate cuts to be in Ethereum right now than in Bitcoin. And of course, if you see this W formation, like break of that high as a good level, where I would add anywhere in between here, I could spread my bids, of course, assuming that Bitcoin can correct, and still with these high levels of Bitcoin dominance, we might also correct on altcoins as well. Now, I also want to give you a few altcoin trades. I would be very active on them in a Telegram group, but there is always the group of people who either doesn't want or cannot access Telegram, so I'm gonna give them the trades once a week. I think it's fine. I feel there are certain alts that already overshot, like Phantom, for example. So there's no need to chase whatsoever. I'd rather be assuming the BTCD hypothesis and East to BTC hypothesis playing out. I'd rather be positioned to something which is closer to the low right now. For example, DYDX or DOT. Looking at DYDX, it actually looks a little bit better, much better, I would say, because this W formation is starting to play out, and we're already accepting above the range. So accumulation here about 0.93 all the way to 0.95, and then I would target those three highs. Those three liquidity grabs are able to happen: 30%, 55%, and 100+%. And as I mentioned, the reason I'd like to take those trades, both spot and leverage, but let's start with spot first on Bybit, is following. I can allocate, first of all, stop loss and take profit way before I have my position filled. So let's take an example of an Ethereum, which I think is actually a very good trade, and we're going to be at least at 5,000 24 months from now, 2 years from now. I have my thesis that Ethereum will be at 5,000, so I think it's a great allocation, but I don't want to buy at the market. I think it's slightly overextended. I might want for it to come and to retest something in between the previous high of the range and current value, let's say 2508. And I'd like to buy, let's say, 100,000 worth of Ethereum. And USDC, great things about USDC, has zero fees, as you can see on the screen. So I understand there is certain issues with USDT trading, especially when it comes to Europe. Don't worry, that's resolved. So most of the major pairs are provided in USDC, and you're also saving on fees. And so my stop loss, right, I don't want it to accept significantly below their previous high of the range, but I give it a little bit, like a little bit of a leeway. So let's say 2400. In this case, my loss will be around 4300, which is obviously respecting the risk management of my portfolio. I have roughly, let's say, around 500,000 here on that exchange because I trust it. So that's fine. It's less than 1%, and my take profit will be somewhere here around those highs, 2770, to make it a little bit more conservative. So it's more than 2-to-1 trade. I'm happy to take it. I click here, and then I don't need to worry. I can also post on this, so I pay. I'm acting as a maker, not as a taker. So in this case, I don't need to worry if I need to actually allocate my stop loss by the time it's going to get filled. It's gonna happen automatically. Then what I really want to emphasize, there are also some coins that are probably not something I'd like to own on spot and to use it as a collateral, but they're very volatile, and I think they provide great risk to reward. One of them is ENA, and then I like to use Bybit in a combination with Steel Street, because here I can allocate. I think ENA has bottomed, and it can provide impressive volatility to the upside all the way to at least 0.5, which will be those highs. So what I'm gonna do here, I'm on a daily right now. I'd like ENA to retest somewhere around 0.23, but I also don't want to be too greedy. What if it doesn't retest 23, it retests only 23.9, and then I stay unassigned on this crazy move, 400% move. So I don't want to be too greedy. Everything between 23 cents and 25.5 cents. I'd like to allocate 50,000 USDT split into 20 smaller orders. And that's how it's gonna look like. You can always preview, and you click submit, bam, and those trades are automatically reflected into Bybit. So your average entry will be somewhere around 24 cents only, but at the same time, if we only retrace down 1 or 2%, I also would stay assigned. So I don't need to ape in and buy the top. I can get a comfortable position here, even like expecting a certain correction that we have reflected today when it comes to Bitcoin. And for those who is watching this video, Bybit is providing right now 500 USDT trade for free. I'll keep the same link in the description down below. And last but not least, I promised a bit of a stocks today since we increased our position in PayPal. We are up 35% in a matter of 38 bars, less than 1 month and a half. Not bad. I was telling you multiple times, do not sleep on PayPal. You see all the zones highlighted here. I believe there's gonna be many more runners. We've been accumulating BABA. For those who does not remember, BABA is up roughly 16-17% from our accumulation zone, and it's gapping up already pre-market. If you slept on BABA, I think Baidu is a great buy here, and overall I think Chinese stocks are gonna reprice. You are entering extremely close to the bottom. We just 6% from the absolute bottom. And for our subscribers in the Telegram group, I've been indicating yesterday night that Baidu is basically having as much money in cash, almost as much money in cash as it trading, considering its market cap right now. So those timely updates I provide in the Telegram day-by-day basis. We nailed absolutely silver, which is gapping up here once again, despite wherever the DXY is doing. Thanks to those timely updates. I mean, you know, there are some people who saved maybe $1 a day for the last 3 months. There are also some people who made dozens of thousands of dollars, myself including, on those silver markets. So silver, once we start entering the next leg of the bull run, it will be extremely hard to manage. So it's very important to have a certain guidance. And for those who wants to join, I keep the link in the description down below. It's completely free, but it's only for Nick's newsletter subscribers, which, as I said, $25 or $30 a month, which is probably the fair value, I would believe so, considering the amount of asset classes that I myself cover. With all that said, guys, I want to keep it short and concise. So next week we're gonna be with more trades, with more updates. There's a lot of asset classes that are gonna be benefiting from that cut as well. So stay tuned. I wish you the great weekend. Much love, touch the grass, and spend some time with your family. Bye.